Good day, afternoon, or evening. Today we will be reporting on PLDT's ratio analysis, and we will start with its background. For PLDT's vision, it is that we aspire to be a happy space using technology to empower and build bridges of collaboration across sectors and communities towards a sustainable future.
As stated by the President and CEO, Alfredo Panlilio, PLDT aims to transform into a highly esteemed enterprise by 2025, focusing on excellence in connectivity markets, ICT markets, and capital markets. This approach underscores the company's commitment to delivering superior performance and positioning itself as an industry leader in 2025.
In the Philippines, PLDT, a telecom pioneer since 1928, has been a driving force in the nation's development. With a legacy over 9 decades, PLDT's commitment to providing reliable telecommunication and internet services remains unwavering. Its extensive infrastructure and long-standing influence makes it a cornerstone in the meeting of the ever-growing demand for seamless connectivity in the Philippines. On the other hand, Converge ICT Solutions Incorporated, an emerging company established in 2007, is making waves, with some of the country's fastest internet speeds quickly becoming the preferred choice for many Filipinos.
Now for the basic industry background. The telecommunications industry has always been a pillar in the Philippine economy. PLDT is a prime example of a telecom company that has become its own institution here in the country. Telecommunication at its core means exchange of information over large distances. It simply means that the telecom provider's primary goal is to bridge the gap between senders and receivers, successfully conveying the message in real time. Over the years, telecom companies have redefined their services to cater to the ever-changing needs of their consumers. According to the International Trade Administration, digital transformation is now led by top local telecom firms and emerging brand companies, and that these staunch efforts have greatly influenced the telecommunications industry's growth in the highly competitive market.
So PLDT as the leading telecom company, they offer comprehensive services from fixed line to wireless. It is listed on both the Philippine Stock Exchange and the New York Stock Exchange, with a substantial market capitalization exceeding 305 billion Philippine pesos as of the first quarter of 2023. PLDT also is among the highest valued companies in the country. Additionally, PLDT scale has earned its recognition among the top 10 telecom companies in the Asia Pacific region by mobile subscriptions. They're also positioned as the dominant player in the Philippine telco space, and they continue to drive innovation through investments in new technologies like 5G to deliver transformative digital experiences across the archipelago. They are also backed by its unrivaled network coverage, diverse service portfolio, and execution of forward-looking strategies. PLDT retains its leadership as the nation's primary digital enabler.
General financial objectives for PLDT Incorporated are to increase net profit income, enhance return on investment, manage costs efficiently, improve earnings before interest, tax, depreciation, and amortization margin, and optimize capital expenditure. These are aimed to strengthen its financial position and deliver sustainable value to its stakeholders. The following ratio objectives are used to track progress and make data-driven decisions. For liquidity, a current ratio above 1.5 and a quick ratio above 1.0. For asset management, a high asset turnover ratio and a high receivables turnover ratio. For debt management, a debt to asset ratio below 0.6 and a debt to equity ratio below 1.0. For profitability, a net profit margin above 10% and a return on assets above 5%. For market value, increase earnings per share by 5% annually and a price to earnings ratio in line with industry standards.
In financial analysis, liquidity ratios such as the current and the quick ratio are vital for evaluating a company's short-term solvency and working capital management. In 2022, PLDT observed a marginal decrease in both its liquidity ratios from 1.26 to 1.22 and 1.25 to 1.22 respectively. This signifies a slight reduction in the company's capacity to fulfill short-term obligations, indicating a potential liquidity challenge. On the other hand, Converge exhibits lower liquidity ratios, indicating potential challenges as well. This disparity can be attributed to several strategic differences. First, PLDT's diversified revenue streams, such as the fixed line and wireless services, offer a more stable income base than Converge. Second, PLDT's adept working capital practices, including optimized inventory levels and stringent credit control, contribute to maintaining a higher current ratio. And lastly, PLDT's historical investments in technology and infrastructure result in a more favorable quick ratio.
Now, we're delving into asset management ratios, placing a spotlight on PLDT, with Converge serving as a benchmark. For the asset turnover ratio for PLDT, The increase from 0.31 to 0.33 in 2022 indicates improved efficiencies in utilizing assets to generate revenue. This is attributed to the strategic investment of technology, network infrastructure, or operational enhancements. However, Converge's higher ratio of 0.37 suggests PLDT can have more effective utilization of assets, potentially driven by advancements in technology, streamlined operations, or more agile business model. For the receivable turnover ratio for PLDT's improvement from 7.53 to 8 in receivable turnover ratio signifies enhanced efficiencies in collecting payments. Meanwhile, Converge's low ratio of 0.03 indicates that PLDT is doing well in terms of credit management systems, without much delays in payment collections and challenges in dealing with outstanding receivables.
Moving on into PLDT's debt management ratios. So from 2021 to 2022, they improved their debt to equity ratio, and this signals a move towards financial stability. With a 7.8% revenue boost and a 48.3% net income increase, PLDT strategically reduced debt by selling assets and conducting share buybacks. This focused approach, including investments in fiber optics and cost cutting, strengthened PLDT's balance sheet. And unlike Converge's uh, excuse me, riskier strategy, PLDT prioritizes stability. This deliberate this deliberate move positions PLDT for growth, resilience, and shareholder value.
The profitability ratios are crucial for understanding a company's financial performance. Net profit margin indicates how much net profit is earned from each unit of sales revenue, while return on assets measures how efficiently a company uses its assets to generate profit. This is important for PLDT as effective management is crucial in the telecommunications industry. PLDT's net profit margin decreased from 0.14 to 0.5 that is below its 10% profitability objective. This could be due to increased costs such as a 60% decline in net income from network and technology upgrades. Meanwhile, return on assets decreased from 0.4 to 0.2 that is below its 5% profitability objective. This could be due to increased investments in network and technology upgrades, which would increase total assets and thus reducing ROA. In comparison to Converge, PLDT's profitability ratios for 2022 are significantly lower, suggesting that Converge has been more successful in generating profits from operations and using its assets efficiently.
Next is market value. Market value pertains to the value that the marketplace gives a certain investment. Earnings per share tells how profitable the company is, and the price-earnings ratio is a widely used metric to determine the stock valuation, whether it is undervalued or overvalued. It helps investors determine the market value of a stock as compared to the company's earnings. PLDT CPS lowered down from 2.47 in 2021 to 0.89 in 2022. It means that it is highly unlikely for PLDT to distribute a part of its profits to shareholders as dividends. With it going lower, it may come off as a risk to future shareholders because it lessens their chances of receiving dividends. However, with the price-earnings ratio increasing from 14.88 to 27.29, denotes that its stock is overvalued or investors expect a high growth rate in the future.
The liquidity situation for PLDT appears challenging, as the marginal decline in both the current ratio from 1.26 to 1.22 and the quick ratio from 1.25 to 1.22 suggests potential difficulties in covering immediate liabilities. The company achieved its quick ratio objective of greater than 1.0, but failed the current ratio objective of greater than 1.5. PLDT shows positive trends in asset management and operational efficiency, as reflected in an improved asset turnover ratio from 0.31 to 0.33 and receivables turnover ratio from 7.53 to 8.0, indicating effective asset utilization and receivables management. While PLDT has not achieved its debt management goals, the commendable reduction in debt to equity ratio from 2.05 to 1.83 and debt to asset ratio from 0.83 to 0.78 indicates a strategic shift towards financial conservatism and enhanced stability, suggesting effective debt management. For profitability, PLDT's decline in net profit margin from 0.14 to 0.05 and return on assets from 0.04 to 0.02 raises concerns about operational profitability and asset efficiency. This requires a reassessment of cost structures and operational efficiency to improve profitability metrics. As for market value, PLDT's significant drop in earnings per share from 121.76 to 48.26 and rise in the price to earnings ratio from 14.88 to 27.29 raise questions about market perception and potential overvaluation. This suggests a need for further analysis and communication with investors to align market expectations with the company's performance. Overall, PLDT's performance showcases strengths in efficiency and debt management, but highlights challenges in liquidity, profitability, and market perception. The company needs to address these areas by reassessing its cost structure, improving operational efficiency, and engaging with investors to ensure a more balanced and favorable market valuation.
And now for the first recommendation, which is to improve PLDT's current ratio by 15% within the next fiscal year through the implementation of the working capital optimization strategy. To address this, PLDT should concentrate on streamlining processes related to the accounts payable. Currently, there is evidence of a decrease in the rate at which PLDT pays its suppliers, as indicated by the increase in the net total amount of current financial liabilities from 97 billion 759 million pesos to 100 billion 837 million pesos from 2021 to 2022.
Achieving a liquidity ratio of 1 implies that current assets are equal to current liabilities. To attain this balance, PLDT needs to carefully manage its cash levels to ensure they align with its short term obligations. This would involve an approach to working capital management, judicious negotiations with suppliers, and a keen focus on the efficient conversion of cash in its operational cycles.
In 2022, PLDT's operating expenses were $2.77 billion with capital expenditures reaching 85 billion pesos. Despite a sales revenue of over $205 billion, there is a significant gap between revenue and expenses. A comprehensive cost efficiency analysis could identify areas where costs could be reduced without compromising service quality. PLDT has been investing in network and technology upgrades, which could have increased costs. Streamlining operations could involve optimizing processes, eliminating redundancies, and improving resource allocations, leading to cost savings and improved efficiency.
PLDT has been in discussions with four major vendors for equipment and assets covered by its 48 billion peso overspending from 2019, and there is room for renegotiation and potential cost savings in their vendor contracts. By seeking more favorable terms or longer contract durations, PLDT could significantly reduce its expenses. Despite being a leader in network innovations, PLDT could still leverage technological advancements for further cost savings, such as adopting more efficient technologies to reduce energy consumption and maintenance costs. Implementing these recommendations could potentially increase PLDT's net profit margin and return on assets by 10% each within the next fiscal year.
To improve PLDT's asset turnover ratio by 12% next year through comprehensive operational efficiency measures, the following steps should be performed. First, network optimization. To improve network efficiency, analyze the current state, find areas for upgrade, and implement technology solutions for better performance and reliability. Technology asset management. For better technology management, assesses efficiencies of current assets like servers and softwares. Think about combining or upgrading old technology to boost overall performance. Set up maintenance to prevent issues and extend the lifespan of the equipment.
Thirdly is operational workflow enhancements. To improve operations, simplify internal processes for better asset use. Use automation when possible to reduce manual work and increase efficiency. It also provides training for employees to improve their skills in managing and using assets effectively. And lastly, regular performance monitoring. So keeping track of asset performance by setting up a strong monitoring system. Use key indicators to measure the impact of operational changes on asset turnover ratios. And regularly check and adjust strategies based on how things are performing.
In conclusion, this analysis examined PLDT's financial health. The company is in a position to take strategic initiatives that will strengthen its financial resilience and set it up for long-term growth. To maintain its position as a dominant player in the telecommunications industry, PLDT will need to maintain constant oversight and flexibility in response to changes in the market. By implementing the aforementioned recommendations, which include working capital optimization strategies, enhancing cost efficiency and asset utilization, and comprehensive operational efficiency measures, the company can effectively manage the business and ensure short-term solvency as well as long-term financial stability by implementing these recommendations.